Hi everyone, this is Steve here again from Sure Trading. In this video, I'm going to talk to you about a very simple and powerful candle pattern called Tweezer Tops and Bottoms, which can be used to successfully find reversal points in the market. Now before we get going, if you like our content, please like the video and subscribe to our channel. We also have links below to our free Telegram channel and our website where you can find more info on the products and services we offer. So please check that out. Right, so Tweezer Tops and Bottoms. Let's start with Tweezer Bottoms. Now Tweezer Bottoms are a 2-candle pattern. There's a couple of rules attached to Tweezer Bottoms, and they're as follows. They must be preceded by a downtrend. So leading up to this pattern, it must be in a downtrend. The first candle of the pattern is red, a down candle. The second candle is green or an upward candle, and very importantly, they must have a visibly similar bottom. And this is then a bottom reversal signal, which means the expectation after this candle pattern is that the market will go upwards. And very similarly to a tweezer bottom is a tweezer top pattern. It's also a 2-candle pattern. Opposite to a tweezer bottom though, it must be preceded by an upward trend. So the price must be going up to this point where the candle pattern starts to form. The first candle is green, so it's an upward candle. The second candle is red, so it must be a downward candle. And they must also have a visibly similar top level. This is then a top reversal signal, which means that the expectation after this candle pattern is that the price will move downwards. So let's go and have a look at a chart where I've got a few examples for you. So having a look at the chart, you can see I'm on a US dollar ZAR 1-day chart. This is the Velocity Trader platform, and I've identified some tweezer tops and bottoms, and let's just go through them quickly. Let's start with this one that I've circled or put a square around on the edge of the screen. So as you can see, before this first red candle formed, we were in a definite downtrend, which is the first thing that needs to happen. Then we have a very strong down candle, a red candle, followed by a green candle with a visibly similar bottom. It's not exactly the same, but they're around about the same level. And now the expectation after this candle pattern has formed is that the price will go up. So let's have a look, see what happened. And you can see that the price went nicely up, and we had a nice move over there. If you look at what we could have made on this contract, we're doing standard lots here. This is about a 5-day move, 5 or 6 day move. If we had got to about there, we could have made around about 25,000 Rand profit on that trade. So not a bad payday. Let's have a look, see for another example. There we have an example over there. Now this is a tweezer top pattern. With a tweezer top, it needs to be coming from an uptrend. So as you can see, this is the trade that we just took, and the trend was definitely an uptrend. We had a nice green candle followed by a red candle with a visibly similar top. Once again, not exact, but looks quite similar. And now the expectation after this is that the price will go down because it's a tweezer top pattern. So let's have a look and see what happened. Took a bit of time and eventually went down. So let's see, if we had taken that move, we could have potentially made about 15,000 Rand on that trade. Once again, very nice payday. Another thing we can look at just to make sure that the signal is valid, or another sort of confirmation on the signal, is when looking at a tweezer bottom, like this one over here, if the stochastic is around the 30 line, which it was in this case, that's a good indication that the momentum is heading upwards. And then a tweezer top pattern, if the stochastic is above the 70 line, kind of on its way down, then that's another confirmation that the momentum is heading in the right direction. Let's have a look and see if we have any more examples over here. There's another one over there. Another tweezer bottom. So you have to have a downtrend, which we did over here, not as strong as the previous downtrend, but a downtrend nonetheless. Red candle, green candle, visibly similar bottoms. The stochastic is below the 30 on its way up, so that's a good sign that the momentum is in the right direction. And we had a nice upward move again. Not as large, but still a good upward move. Then we have another example over here. Large green candle, red candle with a visibly similar top, and there was an uptrend beforehand. The stochastic is above the 70, and we should go down after that. There you go. Downward move. Also the potential of a couple of thousand, 14,000 Rand in that one. And let's have a look for another example. Here's a final example over here. Now this one is not as good an example as the previous ones, just to show you that it doesn't work out all the time. In this one we had a previous downtrend, we had a red candle, a green candle with similar bottoms, and in this case the expectation was that it would go up. The stochastic was below the 30, so that was another confirmation, but it decided to continue downwards or sideways, so we would have made a bit of a loss on that one. Well, there you go. That's a simple way to identify reversals in the market using tweezer tops and tweezer bottom patterns. And obviously, as we just saw in this last example, no strategy works 100% of the time, so it's very important to make sure you are using correct money management and placing your stop losses according to your risk profile. I hope you enjoyed this video. As always, like I said in the beginning of the video, please like and subscribe so that you can get updated when we come out with other videos. Thank you for watching.